Hello and welcome to Stocks Down Under. My name is Stuart Roberts and I'm one of the co-founders of our service. Joining me on the morning of the 27th of April 2023 from Adelaide is Mr. Chris Jamieson, who's the Managing Director of Jade Gas, ASX JGH. Chris, good morning.
Good morning, Stuart. How are you?
Adelaide is a long way from Ulaanbaatar, but you've had to spend a fair bit of time in the capital of Mongolia. Because your company maker is the Tavantolgoi XXXIII production sharing agreement with the Mongolian government looking for coalbed methane, which is pretty exciting by the looks of it.
Oh, look, it's really exciting. The company listed in October 2021, so we're relatively new, but we've been very active. A lot of core hole drilling that has proved up a contingent resource 2C number, gross unrisked of 246 BCF, and we're undertaking a current exploration campaign within the Tavantolgoi permit, and that is proving successful as well. So we continue to uncover thick seams of coal which are gassy, and we are doing the analysis work on those, and it's all shoring up for potential production around this time next year.
Right. So I've been following Jade pretty much since the completion of the reverse takeover, and it seems to me that the thing that's pleasantly surprised everyone is the thickness of those seams, and the level of gas in the seams has exceeded everyone's expectations. Is that a reasonable assumption?
Yeah, look, it certainly has, and I like to compare it to Queensland. And you look at where Queensland was 30 years ago, there was a lot of coal in Queensland, but no gas production. Now Queensland's effectively part of turning Australia into the largest exporter of LNG globally, ahead of Qatar, and 23 million tonnes, 1.1 TCF of gas going offshore, and a revenue stream of around $16 billion. So when you look at where they've drawn their success from, a lot of it's come from coal seams that are no thicker than 5 metres, yet we're averaging around 60 metres in the wells that we've drilled. We've got gas contents of 12 to 18 metres cubed per tonne, and in Queensland, 5 to 10 metres cubed is deemed commercial. And the composition of the gas that we've seen in 2 of our seams is 98%, and the third seam of interest is 92.5%. So we've got high methane content as well, and really for 2 of the seams, it's pipeline spec.
Right. And if there's one place in the world that's a really great place to do coalbed methane right now, it's got to be Mongolia. Country wants its energy independence and wants to transition away from the coal it burns to generate electricity. It's a perfect transition material. And you are so close to the Chinese border, you could almost walk across it from where you are. So you've got a big market to the south of you that's just desperate for the gas.
Look, absolutely. Look, the government is pushing very hard to develop new industries, and it is heavily reliant on Oyu Tolgoi. And once Oyu Tolgoi is up and running with the expansion in 3 years' time or 2 years' time, it's going to be
talking about one of the biggest copper mines ever to be developed, right?
Yes, correct. It'll be the 3rd largest copper gold deposit in the world, and it will be a third of Mongolia's GDP. So Mongolia, they want to develop new industries. They're resource rich, but it's a nation that's still developing very much. And from that perspective, that they are pushing hard for certainly an industry like the gas industry, which has the potential to reduce emissions internally. And as you said, it provides an independent source of energy that's, so they won't be reliant on electricity from China or gas from Russia. The idea is to build this industry, and should it get to the size that Queensland's got to, then gas can go up to the capital, Ulaanbaatar, which is the most polluted city in the world, especially during winter. They burn brown coal there for their energy. So, and when we talk about China to the south, yeah, China's there for sure, but within 200 kilometres of where we are, we've got around about what we deem to be 500 megawatts of power demand, and which is quite
including your friends at Oyu Tolgoi, amongst other things, right?
Yeah, absolutely. I mean, Oyu Tolgoi itself as a mine will be consuming 330 megawatts in 2 years' time. And, that's about a quarter of what Adelaide as a city consumes, for that one mine. So it's very energy hungry, and at the moment, a lot of that energy is coming up from China. And the government, when Rio signed an agreement with the government to relieve debt and move forward, they also agreed if they could source an indigenous source of energy, they would do that. And we are 150 kilometres away from them. So we do have the potential within our field itself to deliver gas into Oyu Tolgoi as a base load for what they want, which is a mix of gas, battery, wind and solar.
Right. Now, you've obviously got to dewater these wells that you put down, this being coalbed methane. That's going to take a while. So if we fast forward to early in 2024, we'll be in a position to know just what the flow rates are coming out of those wells that you've drilled. At that point, you're onto a definitive feasibility study that you've got to submit to the government as part of your permitting requirements. Talk to us about what the rest of 23 and into 24 holds for you.
Yeah, so we're in a very exciting stage for the company. We've done really the coal drilling that's given us the confidence now to move towards the pilot phase. As part of the pilot phase, we'll have 4 horizontal wells, which will have laterals of about 1 kilometre in length, and they'll be intersecting 4 vertical production wells. So basically, the vertical well will produce from the horizontal. This is a technique that's used extensively in Queensland, but it's also used just over the border in China in a basin called the Qin Shui Basin. And there's a company called AAG there that have put 520 horizontal wells down and are producing at 40 petajoules a year, which is around $800 million of revenue in dollar terms. So we will be putting these 4 wells in, and the drilling for those will start around July, August this year. Once each well has been completed, we will start flowing them immediately. So we'll be drilling and flowing at the same time. So the plan is to flow these wells for up to 6 months, see a commercial stabilised flow. And once we've seen that stabilised flow, then, as you said, we'll be moving to a definitive feasibility study. We'll be booking reserves over the area that these wells are, and we'll then move towards an exploitation licence with the government.
Right. So basically, in about 18 months' time, Jade Gas will have reached a serious point in its development of Tavantolgoi XXXIII. But that's a relatively small area you've exploited, well in excess of 600 square kilometres in the whole permit, and we're talking a fraction of that is what's involved in the wells at the moment.
Yes, and that's the beauty of what we have, is that we've put a couple, 3 wells to the east of the permit, and Brownhill and Vista have come up with thick intersections of gassy coal. So we'll be doing further drilling around there, and we have effectively a 45-kilometre strike, because we also have the Barron Narron project, which is adjacent to the west. So we've got optionality in terms of expanding the resource, definitely, and expanding this play. And we also have 2 large permits called Chivy and Eastern Gobi, which are sizable tracts of land, sort of 90,000 square kilometres. And they sit within coal basins as well. So once we have proven that commercial flow, we'll certainly be looking to go after those permits to build an industry here.
Right. So for all this, the market's capitalising you at less than $100 million, which I find extraordinary. What do you think is the catalyst that helps the market wake up and realise the treasure trove that you're sitting on?
Well, I mean, we recently did a placement with UB Metan, who's the largest importer of gas into Mongolia, and that was $11 million, and they now have 19.9% of the company. So
the locals believe in the story, right?
Yeah, so that, I mean, absolutely. They have a coal mine just to the south. They're looking to develop that. Haulage trucks, they're looking at 2,500 haulage trucks to take thermal coal into China, which they want to be LNG driven. And they're talking 400,000 tonnes of LNG a year for that purpose itself. So I guess in terms of excitement, you've got the largest importer of gas has taken a significant stake in us. That should set alarm bells ringing. There will be the potential for GSAs to be struck. and also MOUs with large mining companies that are around us. We've done an MOU with Xanadu, with a company called Monhoris that do gas-fired gensets.
For those who don't know that one, Xanadu is developing what could be a billion-ton resource, a copper-gold resource in southern Mongolia. Not far.
Yeah, and that mine will be about a third the size of Tavantolgoi if it's fully developed. So that's a large play. They're only 80 kilometres from us. So within 200 kilometres, we've got huge opportunity. We're moving towards proving a commercial field here. And, what I say to people is have a look at Queensland. If you could have invested in Queensland 30 years ago ahead of the boom that's happened, would you do it knowing what you know now? And the answer is unequivocally yes. And so we're taking the playbook from Queensland, we're taking it up to Mongolia and rolling it out. And it's not just us, it's Elixir, it's TMK, it's Talon, it's Gasco. There's a number of Australian companies up there seeing this opportunity. So we're looking at expanding our resource, we're looking at proving commercial flow with the pilot wells, and also the potential for GSAs, binding GSAs to secure gas sales over the sort of next 12 months.
Right. And for Chris, investors who don't know you very well, you were an ex-senior executive at Beach Energy going back in the day. Tell us a bit about your background coming up to Jade.
Yeah, so I started early days at Normandy Mining with the team there, Robert de Crepney, in the M&A side of things, and then moved to Ernst & Young and worked in transaction work in London and San Francisco.
You're going to let down after all of the excitement of the Normandy days.
Yes, yeah, well, it's a different environment, that's for sure. And from there, basically moved to Beach and started in investor relations, built the function there, and then moved on to the executive. After that, went and did some consulting with a number of companies on the sort of capital markets IR space. And then the opportunity came to step on into the MD CEO role here, which, I just saw the opportunity as being huge. And like I keep saying, I saw what happened in Queensland and the ability to sort of have a supportive government, which you really don't get here in Australia, to develop new industries. And there's not many countries in the world where you've seen something happen, and it happened in the US, then it moved to Australia, and Mongolia's got similar Permian coals that have high methane levels in them. And so it has been done. It's not like we're doing anything new, and the Chinshui Basin over the border is producing from almost identical coals. So we're confident that this thing's going to work, and I try and implore people to sort of have a close look and get on board.
All right. Chris Jamieson, well done on what you and your team have achieved in the last year since you came on board. Keep up the good work, and here's to a great outcome in October 2024.
Thanks, Stuart. Appreciate it.